Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. There was a lot of news, a whole lot of news that came out today. It's earnings season, which we've been talking about for quite a while. I did a video earlier this week, maybe even last week, about some of the companies that were going to announce earnings. We've been on this, right? So I want to just quickly give you a high-level overview of some of the things that stood out to me, what this could mean for the overall stock market, and then where we may be headed from here. Now, I am still on the hopefully this is a bottom type of environment. Now, Facebook did hurt us today, and the market was down. And again, there's a good reason for that, right? Remember, the way that the stock market is weighted, we have about 5 companies that make up 20% of the value of the S&P 500 and 10 companies that make up 30%. So when one or two of them don't do well, it really hampers the entire stock market, and especially for something like the NASDAQ. For those that don't know, the NASDAQ, that is the index or the exchange rather for tech companies. That's when tech companies get listed, they go to the NASDAQ. And something like QQQ, ticker symbol QQQ, that is a NASDAQ top 100. Obviously, Meta, aka Facebook, is a part of that platform. And the way that the market moves sometimes is, oh look, Facebook didn't do well, Netflix didn't do well, all tech companies are bad. And that's not the case in real life. Like, that's not how it should work, but it is the way that it works. So Facebook, as we talked about yesterday, dropped 25 some odd percent. That dragged down the entire stock market, but particularly tech companies. And I want to just verify real quick as we're talking about it, to give you a more accurate picture of how the market reacted today, because obviously it changes all the time. All right, so the S&P 500 was down, yikes, 2.32%. The NASDAQ was down 4.05%, and the Dow Jones, that's just 30 companies, was down 1.41%. So yeah, I was right. Facebook really hurt us today. But Facebook wasn't the only company that announced. So again, I'm just going over some big headlines and kind of give you a connective picture of what's going on and what to expect. So I took a screenshot at, what time was this screenshot taken? This was around 4-ish. So we had Snapchat that posted their first, and this is good news, Snapchat, again, posted their first quarterly profit. So first ever quarterly net profit, which means that they actually made money for the first time ever. They've been losing money, like many new companies, not just them, for the first time. Tesla did this like maybe a year and a half ago, where they made money for the first time, and the stock jumped up 32%. Great news for Snapchat. Didn't think I would see the day, but great for them. They're actually making money, which might be something you want to look into. Read the report there, decide what you want to do with Snapchat. They're still in the tech space, so be aware there, but it's good that they finally have made some money for the first quarter. Perhaps things can continue. Ford, they also reported they had some mixed results due to supply chain issues. Keep a feather in your cap for that, because supply chain is still going to be an issue. It wasn't just a supply chain, it was also the chip shortage. That is still a thing. We don't talk about it as much because we're so focused on inflation and tech crashing, but that is still a thing. So keep that in mind. Tesla had mentioned problems with this as well, but Tesla navigated it a lot more than Ford did. Then you've got Amazon that reported a 9% increase in sales in the fourth quarter, and they made a whole lot more money, partly due to their Revvion deal. They also had done pretty well in their cloud business as well, which is one thing that, if you like Amazon, but you're not necessarily on the Amazon Prime side of things, which is also a note there, then the cloud business might be something that you do want to look into. So they also did that. Then that Facebook continued its crash from last night, really, and that's what really hurt the NASDAQ companies. Remember, NASDAQ is the index or the exchange that primarily tracks and holds mostly all tech companies. And the way that the market is weighted, however you want to say that, like we said the other day, just five companies make up 20% of the S&P 500, and then about 10 companies make up 30% of the S&P 500. So when you talk about tech and Facebook not doing well or Netflix not doing well, then that's going to tilt the entire tech sector, even though it shouldn't, right? Just because Facebook didn't do well doesn't mean the rest of the stocks, didn't do well. But that's just how the market works, kind of moves in a group think capacity. So Markets were down. This is not necessarily what I expected. Now, I said that I thought this would be a bottom, provided that Amazon and Facebook, which we talked about them doing earnings this week, which is why you like and subscribe. We talk about these things in advance whenever we see them popping up. Now, I didn't think that Facebook would do this bad. They lost users for the first time ever. They weren't making as much money per user. The reason why they had those losses were for reasons that we did expect. The Apple OS update, their privacy update, not really allowing Facebook to track in the way that they used to, was obviously going to be harmful. We brought those things up when we did. I didn't see a 20%, correction. Well, it's more than a correction. 20% crash in the stock, and that obviously hurt the market. Now, we'll see what happens tomorrow, because Amazon did report after the bell, which means market closed at 4. Boom, I started getting alerts about Amazon and all the things that they were doing, both positive and negative. So we'll see what happens there. There is a case, and I don't really get into day-to-day predictions, but there's a case. We're talking about the top 5 companies, right, and how that can really sway the market. We had Facebook did not do well. That's an outlier. Facebook was the only one that didn't do well. Microsoft was fine. Google was fine. Apparently Amazon was fine, which I wasn't sure how that was going to go, because Amazon had been down for quite a bit. And then who are we missing? So we had Facebook, Amazon, Apple, Microsoft, Google. Everybody but Facebook did well. So we'll see what happens. Hopefully we can have 4 out of 5 days where the market has been up, which is a great reprieve from what we used to have. But here's what you need to know as an investor. Hopefully, again, my guess is that still we're at that bottom phase where things should start to rise, because we're really out of the thick of it when it comes to earnings. So we shouldn't have any major financial events, major known financial events that would absolutely continue to tank the market like we saw today. Now, that's not a guarantee that tomorrow will be red. Hopefully it's not. But we've gotten Facebook out the way. I think we know what happened there. We got Amazon out the way. We'll see how the market reacts to that, and then we'll kind of sort things out from there. So hopefully this is the bottom and things continue. But here's the themes are still here, right? And you need to position your portfolio for these themes if you haven't already. Supply chain and the chip shortage, those are still issues. That is one of the things that both Ford and GM and Tesla all brought up, but Tesla was fine. They bounced 10%. Ford did not, and they weren't. When I looked at it, I think it was down like 2% or so. I don't know where it ended, so be careful of that. So those are 2 things. Obviously, inflation is still going to be a thing. Once the Fed raises rates in March, that's still going to be a thing. So I still think that playing defense is extremely important. You want to get a quality company no matter what, right? But getting quality companies that pay dividends will be a bigger benefit in my view. Now, I'm not going to say only buy stocks that have dividends. That's not my style. You can do that if you want. But if you can get a good company that is growing and it pays a dividend, that's going to be even more valuable in my view in times like this. So I throw this one out there all the time because this is one of the few companies that do both. Google's a great company. I would invest in it. I am investing in it, but it doesn't pay a dividend. Now, that's not enough for me to say no. Okay, so that's just me. I'm going to still put my money into it. But if I can find more companies like maybe Lowe's, maybe Home Depot, maybe Costco, those are just the ones that come to mind. Maybe even a Coca-Cola. That had done real well recently. I don't know why, but they also have a long history of paying dividends. So maybe those are other places that I'm looking, because they tend to be defensive. If the market doesn't end up great this year, you still gonna drink Coke. You're probably still gonna go to buy groceries. You're still going to go to Home Depot to fix your house and do all kind of stuff. So those tend to be relatively safe places in times like this. Tech is still going to be iffy. Yes, it can recover, in a bit. So Microsoft is okay, not great. Google, I think, is going to do well because they're doing the stock split. But here's the thing. I would not hop into these stocks just because it's doing a stock split. So if you were not interested in buying shares of Google even on a fractional basis, don't jump in now just because, oh, they're going to stop doing a stock split. That's not going to happen until July. Could the stock grow between now and July? Yes, they could. But you need to do your research to decide whether or not that's going to be a company worth investing in and what is going to happen beyond that. Go and check out my TikTok on this topic and go and check out the video on this topic as well, because you'll see, right, the times that these splits occur, there tends to be a little bit of a dip and a disappointment before the stock takes off, and that tends to be like, a month, maybe 3 weeks long. So I don't want you to say, oh, I'm doing it because of the split, like people did with Apple and got mad that they lost money, when we did an entire video about how Apple always does that. Now, Apple isn't Google, and we can go on about how the difference between the companies, but you do want to be aware of that, and that is the important thing. This market has taught us what the themes are, and you need to position your portfolio just a bit to put it in the best places to succeed, or at the very minimum be safe, and that's what you want to do. If you own tech companies, like I own shares of Facebook in my IRA that I got years and years and years ago, and it's done quite well. I don't want to look at it today. I have not opened my IRA because I don't need to, right? That's my long-term money anyway. But the reason I'm not, panicking and worried about it is because I already own REITs, right? I own American Tower REIT. I own, Prologis that you guys see on public. So remember, REITs, healthcare, quality dividend stocks like Lowe's or Home Depot or Costco or Coca-Cola, like these are some of the core things that you want to have in case things don't go the way that we want them to. Bare minimum, hey, look, I'm getting a solid dividend that I know I can count on because Coca-Cola's been doing it for, 50 years straight, right? So these are the things that are out there and that are present. Supply chain, chip shortage, inflation. You need to have answers to those questions. You need to have answers to these situations in your portfolio, because if you don't and you are only invested in tech, you can have some tech, but if you're only invested in tech, it can be really, really rough. I am glad that I got out of PayPal and Block, also known as Square, when I did. I got an alert today that the company, for Block, they dropped as low as $100 a share. Now, they've been dropping since July. This is why I have that 6-month rule. Okay, because after 6 months, that doesn't mean I'm going to get rid of it, but after 6 months, it somewhat predicts to a degree based on studies. I didn't make up the rule, right? I didn't make up the studies from a UCLA study, UCLA Anderson School of Business study. I want to say the article was from 2018, where they measured this stuff out, where, hey, look, 6 months, decent indicator of what may happen the next 6 months. Not a guarantee. Not a guarantee at all. We've seen things work in the opposite direction. But you need to sit down and say, look, what we thought, and I thought that Block was going to be as one of the best quality companies, innovative, all kind of stuff. They're up 90 some odd percent. It was up 130% when we talked about it at the end of, I think it was 2020. End of 2020. It was like, this is it. And it was until July of 2021. It fell off and it keeps falling off. So adjust, right? Make those adjustments. Shift your portfolio. This is that time to do it, which is why I talked about what I was doing and how I was doing back in December to adjust for things like this. These are things that help you to protect yourself. These are things that help you put you in position to succeed. You don't have to do it every day, right? These things aren't going to change overnight. Supply chain, chip shortage, inflation, none of that stuff is going to be an overnight thing where tomorrow is just magically gone. So position yourself now. Go back and check those videos about where are the best places to invest in an interest rate environment, higher interest rate environment, or inflation. We've covered all that stuff. That stuff is there for you. It is 100% free because you're on YouTube. If you subscribe, though, you might get a bonus. Okay. All right, so that is it for me today. I just wanted to give you an overview. If you want me to go deeper into some of these companies, maybe Snapchat, which I'm interested in, I'm just curious, or what to do with Ford. I'm an investor in Ford. Amazon, whatever else reported, hey, put it in the comments below and say, look, this is a company I want to learn more about. How do you decipher X, Y, and Z? The other thing too is if you are subscribed, which again is to like the second or third time I've mentioned it. If you are subscribed, when I look into the platform, the YouTube platform, it actually highlights people who are subscribed, so it's easier for me to get to those questions and comments. So incentive for you. All right, that is it for me. Last thing, I can't reach my book here, but it's Black History Month. Yeah, it is. But make sure that you get my book, From Burning the Blueprint, how to rebuild Black Wall Street after a century of silence. I'm doing a lot of really interesting takes and threads on Twitter on a weekly basis now. Today was unplanned, but you definitely want to check those out. A lot of the news, notes, and research that I'm pulling for that content actually comes from the book. I talk about the stock market, talk about how to build wealth, and a lot of the history from my hometown, Tulsa, Oklahoma. So make sure you get a copy of the book if you have not already. And that today will be it for me. All right, talk to you guys later.